Hello everyone, welcome to Green Tea with Ashish, India's first and only video podcast. Today we have with us Vatsal Kanakia, one of the brightest minds I have ever met. He is currently a CTO in 100x.vc and also a partner in Mehta Ventures Family Office Investments. He has been meeting a lot of founders and students from various top universities, and today he's gonna share his learnings with us. So let's welcome Vatsal. Welcome to the show, Vatsal, and thank you so much for taking your time out. And I have been watching the work you have been doing with 100xVC. You have been meeting a lot of students. You have been to IIM Kozhikode, if I'm right, recently, and then you were also interacting with the founders in NASCO, 10,000 startups.
Yes.
I think you're getting a lot of exposure, and that's why I thought you would be a perfect person.
Right. So thanks, Ashish, for having me on the show.
My pleasure.
Happy to happy to be here and share my thoughts. I've been in the startup ecosystem nearly 2 years now. Actually, maybe a bit more than that now. And it's been fantastic. You tend to live in a very structured environment before. I mean, you go to school and then you go to junior college and then you go to college, and all of this is very structured and an open environment. And then if you get into a corporate job or internship, that's structured to some extent, right? You have like hierarchies of management, and you have specific instructions as to what you're supposed to do, etc. Right? Whereas, the startup ecosystem is like nothing else, right? In any part of the startup, whether it's a VC or whether it's a startup itself, right? Or whether you're an angel or whether you're part of a family office, if you're engaging with startups, you have a plethora of roles, right? You see, it's an open world, right? You don't have a fixed set of rules by which you play. It's like, to give an example which gamers might understand, it's like chess versus Dota, right? Chess, you have very specific rules in place with, and you can pretty much memorize the steps and get ahead. Whereas Dota, there is a lot of coordination with a lot of players. It's an open world. There are a lot of uncertainties and a lot of factors. And so that's kind of what it's like being in a startup ecosystem, right? You don't have fixed responsibilities. You're not thinking, okay, you know what, I'm just an analyst for a VC fund, so my only job is, okay, I'm supposed to evaluate deals or get deal flow. You're doing so much more. You're marketing for the VC fund. You're the face of the VC fund. You're engaging with founders. You're their sounding board. You hear their ideas. You give them feedback. And there's just so much you do, right?
Yeah.
So it's been an amazing experience. It's not a specialist ecosystem. When you're in the startup ecosystem, you're not going to be a specialist, right? You may have been a specialist your whole life. Okay, I'm a coder, then I'm a Java coder, I'm a Java expert, I can build Spring applications very well, I know product architecture for, like, large scale web applications, enterprise scale web applications, and that's specialization. But when you're in any role in the startup ecosystem, you're like, okay, I can do a little bit of marketing, I can do a little bit of sales, I can do a little bit of tech. That's kind of how it is. It's you
And
have to be a generalist.
yeah, and as soon as the situation changes, you have to do some different kind of work. So it totally depends on the situation and the kind of work which is coming your way, and you have to be a generalist. That's exactly, I totally agree with that, because as far as my journey, I have seen that's what I have also become. So I used to be a sales guy. Now I'm running product, I'm running marketing, I'm doing sales. So you have to be a journalist where you can do every sort of work, and that too with sort of perfection, because startup is all about perfection and getting the work done at the end of the day. So thank you so much for sharing that. I think another very important question which was there in my mind was I saw on your profile that you have invested in a lot of startups yourself, and would love to know why why you chose this path at very early stage in your life, and how important it is for people to start investing into the startup ecosystem. So because as we see, there's a lot of failure rate with the startups, and it's very difficult to find that gem out of it. So what has been your thought process, if you can share that with us?
Sure. So, I started investing through a family office, my family office. So, Meta Ventures is my family office, and essentially, these investments are through them. Startup investing, why I got in so early is essentially, it's an amazing way. I mean, once I was out of college, I knew I didn't want to stay in a structured environment anymore. Right? I had an internship in a very corporate environment, Morgan Stanley, and that didn't turn out well. I didn't enjoy the structured environment. I needed more freedom. I needed more uncertainty, risk, right? Because that's where I would learn, especially in my early stages. But so I had two options. One was to join a startup myself, or one was to become an investor and work with startups, right? So I chose to join the family office and become an investor in startups. And what this allows me to do is essentially, learn about hundreds of different business models, right? I mean, I'm not limited to just seeing like fintech startups and just thinking about credit and lending and blah blah blah. I'm seeing one day I'm seeing fintech startups, the next day I'm seeing FMCG product, and the other day I'm seeing a quantum computing startup, right? So I get exposure to so many different technologies and so many different business models. It's crazy, right? And it doesn't necessarily have to be that this is what I'm going to do all my life, right? That's kind of one of the biggest learnings you get from the startup ecosystem. You're not here because you want to do the same thing over and over, right? The way startups works is you do something and then 10 years later you're doing something else, right? I mean, most founders look at their own startups that way. They want to exit and they want to do something else because everybody who's in the ecosystem is relentlessly kind of looking to do more and more and more and have more impact and do it in different ways, right? Because everybody in the ecosystem becomes a generalist in the end. So they feel like, I can contribute in so many ways and I want to contribute. So idea through this is, to be able to contribute as much as possible into the ecosystem. And I mean, like I said, through 100x VC, I mean, I'm part of 100x VC now. I'm the CTO here. So we invest in 100 startups every year. That's our goal. Um, Imagine investing in 100 startups. That's amazing for us and for the startup ecosystem, right? Imagine even if over the next 5 years we invest in 500, and even if, I mean, worst comes to worst, even if like 10% of these survive, that's 50 startups for India, right? And if each of these 50 create 1,500, whatever, 2,000 jobs, that's amazing for the Indian ecosystem. So, that's the kind of impact we look for, and across measures, right? And part of being an investor is that you can actually direct the outcome. While of course the vision is the founders, the work is the founders, everything is the founder, 99.99%, right? But even that 0.01%, if you are able to give an insight to the founder, that can amplify to so much more, right? I mean, to put it in a way of numbers, right? Even if you're uh, putting 0.01% impact, right? If it's a $10 billion company, then that's what? I mean, that's like $100 million worth of impact you made, right?
Yeah.
If my math is correct. So just like that, that's kind of how I think about angel investing. So, but yeah, I wouldn't suggest it's for everyone. One thing is, of course, that SEBI rules state that you need to be an accredited investor. So there are certain rules as to who and who cannot invest, and it is definitely a very risky um, mode of generating wealth. But absolutely, if you're looking to engage with the startup ecosystem, I mean, investing is not the only way, right? There are so many ways. You can be an advisor, you can be a mentor, You can be an early employee, buy ESOPs, you can be a co-founder yourself, each of which has much significantly less monetary risk. I mean, of course, there'll be other kinds of risks with those. Um, Investing in general has the most highest monetary risk, but
Yeah.
so there are trade-offs.
Yeah.
So it's to everybody's taste.
Yeah, true that. So you talked a lot about the startups you looked at and the kind of learnings you had. So what is a best fit as a founder for you in a startup? So what are the qualities or experience you seek for before investing into a startup or something around that if you can share?
Sure. So personally, what I look for is, that ability to tell stories is number one for me. Right, it is very important for founders to be able to tell the story. Right, I mean, in the end, you're a salesman. Everybody's a salesman. Everybody in life is selling themselves or something else to somebody at any point in time when they're engaging. Right, so as a founder, you're selling your startup to investors, to potential customers, to clients, to anybody, any stakeholder in your value chain, right? And so you have to be able to tell the right story, right? Especially when you just have a product and you have nothing else to show. If you're able to tell the right story, and not just to themselves actually, but to yourselves as well, right? Because if you tell the right story to yourself, then you're able to convince yourself that this is a bet worth taking. If you're able
Yes.
to tell the right story to a co-founder, you're able to convince them to join you full time, leave their job, right? So storytelling is very important. How you tell the story about your life, how you tell your story about your startup, how things fit in to the whole ecosystem in general, and beyond that, of course, I look for specialization, right? So typically, I personally prefer teams with multiple co-founders rather than single founders. And reason is simple, right? One is that you can't. It's very tough to bear the burden of being a single founder, right? There's a lot of work with startups. You're doing fundraising, you're selling your product, you're building your product, and there's so much work managing teams, etc. So it's very tough to be a single founder and handle all that yourself. I mean, there have been examples, of course, who've done this, but it's very tough. So when you have a co-founder, he's also, or she's also your sounding board, right? You can tell of your frustrations, you can distribute responsibilities, and in general feel a sense of companionship, right? You're not alone in this, and that is
Right.
very important. And second part of it is, of course, from an investment perspective, what happens is, while yes, most founders tend to become generalists with time, they tend to start out as specialists, right? It's somebody who's a logistics and supply chain specialist who'll come and say, I want to do a logistics startup. And then they learn to kind of do the rest of the stuff. So when you
Right.
have co-founders, right, who tend to be from maybe different experiences, it can be really beneficial for the startup and for you, because you learn a lot more from somebody who's more experienced in that field. And you can actually kind of, delegate responsibilities better, because if you're a supply chain specialist and she's a sales and marketing specialist, then you know that you're the one who's building the whole process around supply chain, and she's the one who's gonna be doing the sales and BD and that kind of stuff. So that's why we prefer. But those are two, I think, major things I personally look for is an ability to understand the market very well. That specialization of the market,
Mhm.
having a team of founders rather than a single founder, and being able to tell the story well. Yeah.
Totally well. Yeah. Thank you for sharing those points. I think very crucial points before you go in and find your founder if you haven't find yet. Uh, you have been very lucky in as per my opinion, to be working with Mr. Sanjay Mehta himself. And so, what has been your learnings around the fintech ecosystem of India? So, how do you see it going forward? Like, there are so many lenders now, and with banks facing so many NPAs, how do you how do you see the fintech ecosystem growing in India as such?
Right. So I think you know it's in the. I mean, firstly, yes, I am very lucky to be working with Sanjay. Let me acknowledge that. It is an amazing experience to be with him. Right. He's an amazing mentor and friend and coworker to have. But beyond that, I mean, about the fintech ecosystem, I think startups have really made all of them have discovered that there are certain problems in the fintech ecosystem that need to be solved. In the beginning, the realization was that most people are unbanked and don't have access to the digital economy. So that's where the wallet ecosystem popped up, right? But in the beginning, as in the 2010s, but NPCI came along and disrupted them, and nobody expected the government to come and disrupt the fintech ecosystem, right? But yeah, so since then, I think we've been seeing startups focusing a lot more on access to credit, right? Which makes sense. Most top economies around the world have been able to grow when even the smallest of individuals in those economies have access to reliable credit with which are not predatory, right? I mean, we've all heard about loan sharks in villages who take like uh, 30% week on week interest, right? Which is like horrible for individuals and farmers. They get into a debt trap, right? So we're seeing a ton of those. So we've not seen anybody completely solve the lending problem, giving access to credit, because this is a two-way problem. One is, of course, distribution. You need because these guys are typically lending to I mean, micro lenders, right? So they're
Yeah.
typically lending smaller checks to a large number of people. They're looking to gain access to a large number of people. So distribution will be key in this, right? Already many startups tend to start out with distribution. So I mean, Paytm, BharatPay, Khatabook, all of these have amazing distribution. But my belief is, beyond this distribution, their way of monetization will be lending, right? So, for example, it's like when in the 2000s in the US, uh, everybody would start up a social network or any single website, and once you have like 100,000 monthly hits or a million or 2 million user base, what you do is then you monetize using ads, right? It's something
Right.
like that where today fintech startups are looking to gain access to that larger base, gain distribution, and then once you have the distribution, go into lending, right? But alternatively, I mean, we've been looking at a few different methods in this fintech space. So, I mean, two of our 100x portfolio companies, what they do is, one is Buena Finance. What they do is essentially they're not looking to be lenders in the traditional sense, right? Okay, I'll take 3% interest or whatnot, right? Their whole goal is कि ये जो blue collared workers होते हैं who are slightly tech savvy, right? Let's say the Swiggy and Ola and Uber workers kind of thing. Give them access to credit, but take a minimal fee off of that. And the idea is to help these guys build the CRISIL score, right? So what
Right.
this allows you to do is, as an individual, as a blue collar worker, you don't have to depend upon micro lenders for your life, right? Once you have your blue collar, I mean, your CRISIL score in place, you can actually take loans from banks and get really good terms, right? So that's kind of a different model we're looking at. And then another one is Pocketly, which is doing something very similar for it's doing micro lending for students, right? And what this helps them do is, even students get to build up their credit score over time. And
Yeah.
then by the time they're employable, banks know who's trustworthy and who's not, right?
Right.
So this is a different. It's an ancillary business we're seeing grow, and we believe. I mean, this is the space, and I concur with. I think Sanjay had put this view up a few months back, where he said, fintech is going to be eaten up with by the large banks, and I concur with that. So what happens is, the kind of cash banks have in hand, it's crazy, right? I mean,
Yeah.
the liquidity they have. So it's very tough for fintech startups to actually compete with them, especially in a business where once they realize that, oh, this is a profit making business, and this is actually somewhere people can make money, banks can easily spend a lot of cash
Yeah.
and capture that like nowhere others, right? Their
Yeah.
distribution is much better than any fintech startup.
And
um,
people trust them, and they just have to sort their tech out.
Absolutely,
Yeah.
absolutely, absolutely. So, I think, I believe the biggest way neobanks and fintech startups can actually work out is actually to have deposits first, right? So, one of the Meta Ventures portfolio companies called Juno Bank. They're a Sequoia Search backed company now. And what they do is they're a neobank, and what they're doing first, Varun Deshpande, he mentioned this, that what we want to do first is we want to build deposits first. I mean, if you don't have deposits in place, right, you're not actually a bank. What
Yeah.
the whole thing about being a bank is getting deposits and then
That's right.
reinvesting those and returning the interest back
Right.
to their depositors, right? So I think the neobanks that will survive will be the ones who have good deposits in place, right? And I think Paytm's doing that well now, quite a lot. I mean, so let's see how it goes. But that's kind of my rambling take on fintech.
Yeah, I think interesting conversation, and I think you raised quite a good points which came out. And I think fintechs who are fintech founders who are listening to this, they will take a point out of this, that they need deposit to actually lend at the end of the day. Then they are true banks, and very different models. I got to hear from you about the two of the portfolio companies, and I will definitely have a look at them. So another, and I think last question from my side. You are a big believer in technology as such, and but what we have seen in India, especially, is most of these successful companies, the startups, basically, if I have to name, are the Ola, OYO, all these are the operational focused companies who are being successful in India. So there is a general trend or a thought process in the in many of the many people I have met, and they say, technology, Indians are good, and they can form a company around it, but at the end of the day, only operation focused companies like Oyo, Ola, and others can succeed in the market. What is your thought process around that?
I mean, I would strongly, very, very strongly disagree with that. I think while yes, a lot of these companies that have succeeded have great operations, but um, it's 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 very. I believe it's kind of rude to say that they're only operation-based companies. For lack of a better word, what happens is, I mean, it's like saying, what is shuttle, right? I mean, if nobody's aware about shuttle, it's basically a service that gets you from point A to point B in fixed routes, and they have. Yeah. So somebody might say, hey, you know what? These guys are just reinventing the bus, right? It's easy to say that and be a naysayer and be a skeptic and be 99% of the time, but what you tend to look over is that these guys have a lot more data than your bus services would. They would know what routes are efficient, what not. They put a lot of tech behind these to, have their operations go successfully, right? There's one thing about, yes, being operation driven. There's other thing about using tech to actually optimize those operations at that level, right? So there is definitely more than just a bus service, right? I mean, there's a lot of tech behind it. There's a lot. And so similarly with Ola and Uber, I mean, think about the pool, right? Pool,
Yeah, that
Uber
tech
pool or Ola
driven.
share.
Yeah.
It's a non-poly. I mean, for anybody who's studied computer science, they would know that it's a non-trivial problem to solve, figuring out the shortest path from point A to point B, right? Or in a pool's case, which is the first one to drop, which is the second one to drop. It's non-trivial. It's a non-polynomial solution. You can't solve it in seconds. It takes a lot of computation to find an optimal solution. So these guys have a lot of tech behind uh, the algorithms that allow Uber pool and Ola share to happen. I mean, it may seem easy to you but that's because they've put in so much effort behind that, right?
Right.
Connecting you, the algorithms that connect you to the right driver, the pricing, all of that. There's
Mm-hmm.
a lot of tech behind it. I mean, it's not just somebody deciding कि okay अभी 10 रुपया बढ़ाना है next घंटे में क्योंकि supply ज्यादा है, right? It's all
Mm-hmm.
algorithmic and it has to be optimal. They have to find the right price where people will actually say no, and people will actually want to take the ride anyway despite the price, right? I mean, you don't want to price it at like a 15,000 rupees for
Yeah.
Kormangla to HSR. Nobody's gonna take that, but you gotta price it just right, and depending on the supply and demand, and there's so many things that are
Right.
there in the tech, right? So it's reductive. That's the right word. It's reductive to say that these are all operational, operations focused companies. There's a lot more to them than that. And the second part of it is, I mean, beyond that also, we are the in any economy, the first thing you're going to see is industrialization. Post industrialization, you'll see consumer businesses, right? So we saw a ton of consumer businesses come along, but once those consumer businesses come along, typically then these businesses become ideal customers for B2B businesses, right? So that's where now we'll see our share of B2B businesses focused on India come up, right? Khata book and whatnot. I mean, they're doing different models. They're selling to SMBs or mom and pop shops, but Freshworks, etc., have had success. While their primary market will not be India, I believe that as more and more consumer businesses come up, that will definitely lead to a lot more B2B businesses, product companies come up, right? I mean, you need a business to sell to before you can build a B2B business, right? And those businesses that can buy would typically make the money off of consumers, right?
Yeah.
So
True.
as more and more incumbents to become open towards working with startups,
Mm-hmm.
in the sense that, hey, banks say, okay, we're open to taking up a startup software rather than, always going for like, your Infosys's and alls of the world, right? Where you just ask them to make a bespoke software.
Right.
As more and more of them are open to work with startups, I think we'll see a lot more tech product services and that kind of stuff. And I mean, there's just so many more businesses that can be built.
Yeah.
It takes time, right? We're a very nascent ecosystem, right? I mean, the in the public mindset, the startup ecosystem blew up maybe 2012, 13. Oyo was really what brought the startup ecosystem in front of the people, right? कि ऐसा भी होता है, funding होता है, ये होता है, valuations होता
Right.
है, that kind of stuff. So it'll definitely take time. We have Oyo, Flipkart, those poster boys have opened the public's imagination. And as more and more people realize this is an option, more and more founders will come along. And the more founders, the more products. And the more products, the more businesses that succeed, right?
True.
So you have to be patient for that.
Thank you so much for sharing all the information which you had with you. Uh, uh, Glad catching up with you, and would love to have you again on the show. Thank you, Vatsal.
For sure.